Shopify made a revenue of $11 billion in the last year with a net income of $1.2 billion, which gives them a profit margin of 10.6%. They're currently selling for $115 a share, which gives them a PE of 121 based on last year's numbers. Now let's evaluate whether or not buying them at this very high price could make sense. They are starting to transition from a startup company to an established brand. So for a bear case, I'm going to assume a bit slower headwind growth than they expected, still very high growth. So I gave them a revenue growth of 15% for the next 5 years, with a still a bit more lower profit margin of 10%, staying around where they roughly are currently. And they announced a bigger share buyback program, and I'm still going to assume that they may also expand it in the future. PE is a bit difficult because they're still growing so much and are still very much a hype company. I think I'm going to give them an even higher PE. Sorry, I think that's a bit difficult to justify, but I don't see them dropping below the 20s anytime soon. So these numbers would take the stock price to a whopping $51, which by today's price would be an annualized return of almost negative 15%. But in contrast, let's look at a bull case, same 5 years, but this time a higher expected revenue growth of 22% annualized, which would 2.7 times the revenue in the next 5 years, so big growth here, and an expanding profit margin of 15%, and still the same share dilution, reducing your share count by around 2%, and a higher PE of 32. You know what, let's go with 34. And this would take the stock price to $135, which bought at today's price would be a 3% of annualized return. And if we combine these two cases, they would go to $93 with an annualized return of negative 4%. You know, let's try something out. Which numbers would they need to hit in order to be a buy at today's price? Let's do 25% revenue growth, maybe 17%. Let's go with the same share dilution and maybe a P of 40. And at those very high numbers, the stock price would be an annualized return of 12% if bought today. But I don't think they are impossible. They might as well just hit them. But considering that the downside is currently not covered by this very high price of the stock, I'm definitely passing on it. I will wait for it to potentially plummet a lot in the future before I would go near this stock, because at this price right now, it doesn't make sense for me to buy it. But if I'm missing anything, let me know what you guys think about this company. Maybe there is a higher upside that I'm not aware of. So definitely let me know down in the comments. And thank you for watching. I will see you in the next one.